Federal unemployment tax, or FUTA, is a federal tax levied to help administer the federal unemployment program. The tax paid for FUTA is used only to oversee the state programs. It's paid only by the employer and is not withheld from the employee's checks. If you'll look, you'll see that the actual FUTA rate is 6%. For participating in a state unemployment program or for paying state unemployment taxes, a company can get a FUTA credit of 5.4%. So the actual FUTA rate is 0.6%. Now keep in mind that benefits are not paid out of this FUTA tax program. It is paid out of the state program. So if a person becomes unemployed through no fault of their own, it's the state unemployment program that actually pays the benefits. Now calculating FUTA works a lot like calculating Social Security, except the wage base is much lower. So here are some things to remember when calculating taxable earnings for FUTA tax. If the current pay that you're given added to the year-to-date pay that you're given does not go over the $7,000 wage base, then all of the current pay is taxed for FUTA. So let's look at an example. If an employer in Ohio has a worker with year-to-date pay of $2,000 and his current pay is $1,500, if you add these two figures, the year-to-date and the current, you get $3,500. That means the worker has not exceeded the $7,000 wage base. So he is fully taxed, or his employer is actually fully taxed on the current pay of $1,500. So in this case, the FUTA tax is $1,500 times the 0.6% rate. And when you're calculating that, make sure you get your decimal place your decimal in the right place. It's 0.6% or 0.006. So the FUTA tax in this case is $9. Okay, let's look at the second point up here. If the year-to-date pay is already over $7,000, then none of the current pay is taxed for FUTA. Okay, that means that the worker has already exceeded the $7,000 wage base, so the employer no longer has to pay FUTA tax on that worker. So here's the example. An employer in Ohio has a worker with year-to-date pay of $12,000, which is already over the $7,000 wage base. So none of his current pay, which is $1,500, is going to be taxable. So the FUTA tax owed will be 0. So let's look at point 3. If the current pay added to the year-to-date pay does exceed $7,000, then take the wage base of $7,000 and subtract the year-to-date pay. This will tell you how much is taxed. So let's look at example 3. If an employer in Ohio has a worker with a year-to-date pay of $6,000, his current pay is $1,500. If you add the year-to-date pay and the current pay, you get $7,500. This means that part of his pay is under the $7,000 limit and part of the pay has exceeded the $7,000 limit and is not taxed. So in order to find the taxable portion, just take the $7,000 wage base, subtract the $6,000 year-to-date pay, and you get $1,000 taxable. So to calculate the FUTA tax, $1,000 in taxable pay times 0.6% equals $6. Now, when you're calculating the FUTA tax or the state unemployment tax, these same rules apply. The only thing different is that every state has a different wage base, and every state is going to have a different FUTA tax rate. But if you'll apply these examples and apply these 3 points, they will help you to calculate the correct FUTA tax as well.